Hello everyone, welcome to SanskarEdutech. My name is Mayur Rambhiya and today we are going to discuss goods and service tax, which is also known as GST. Let's begin with the introduction. GST is a unified direct tax system in India. As we know, it's one of the important tax system in India. It replaces many indirect taxes such as VAT, excise, service tax as well as entertainment tax. These are totally, it's submerged around 17 indirect tax into one tax. That is, this is also known as one nation, one tax for one market. This reforms is simplify the taxation system across the country. Let's move to the birth of GST. Now understand how GST was introduced. GST come into existence through the constitutional amendment of 101, that is 101st Amendment Act 2016. The GST Act come in 2017 and the date which is enacted was 1st July 2017. The main objective, as we have already discussed, it's one nation, one tax for one market. Moving ahead, let's go to the type of GST. There are four types of GST which is there in India, and one is GST cess. Number one is CGST, which is also known as Central Goods and Service Tax. Next, we have SGST, which is known as State Goods and Service Tax. Third one, we have IGST, which is also known as Integrated Goods, Service and Taxes. Fourth one we have, that is UTGST, which is also known as Union Territory Goods and Service Tax. Apart from this four, also we have one more tax which is also known as GST cess. Generally, GST cess we won't impose on every goods, but certain goods are there on that government impose GST cess, which is an extra tax on that particular goods or services. Let's move to the next. Let's discuss the features of GST. It is a destination based tax. Why it is a destination based tax? Because we impose tax based on the destination. Where the supply gets end, on that state the GST gets imposed. Example, if suppose we'll take an example here, suppose the two person Mr. A and Mr. B who's there in the Maharashtra and they are selling product. Mr. A is selling product to Mr. B. At that time, Mr. A will impose a CGST as well as SGST on Mr. B. But if suppose Mr. B is in Surat, or we can say in Gujarat, and Mr. A is in Maharashtra, so at that time Mr. A will impose IGST, which is also known as Integrated Goods Service Tax. So here, that's why we called as it's a destination based tax. So whenever the destination of one particular state or UT, that is Union Territory, gets changed, at that time the GST accordingly imposed by the trader. Now that's why it's a destination based tax. Moving ahead, it's a multi-state and comprehensive. As we have already discussed, it's a multi-state and comprehensive. It's covered UTGST, SGST, CGST and IGST also. It promotes ease of doing business. By GST, as we have already discussed, first it submerged around 17 indirect tax. So now trader has not to worried about the other taxation system, only he has to think about the GST. No need to worried about service tax, VAT, excise as well as the other indirect tax. Now is only focused to the GST. So which also it's a very ease for a business to do their trade. Let's move to the GST rate structure. Earlier, GST had the multiple tax slabs which made it slightly complex, but over a time reforms has been introduced to simplify the structure. GST rate structured new on 22nd September 2025. Government come up with a new pattern, that is GST 2.0. In that they have made the changes in the rate. Earlier the rate was like 0%, 5%, 12%, 18% and 28%. But as per the new slab rate, here we have the rates like 5% and 18%, which covers the majority goods and services, and also they have come up with a rate of 40% of GST on luxurious and sin goods. Now, what do you mean by luxurious and sin goods? We are going to see now. Some key changes includes reduced tax on services like hotels, gym services and agriculture machineries. Also, earlier as we discussed, the sin goods like we have pan masalas as well as Edutech drink, in that they have imposed the higher rate slab, that is 40%. Also, they have increased the tax on luxury car, large motorcycle and gaming service. As you know, if suppose you are going to buy the motorcycle more than 350cc, you have to pay a 40% GST on it. Below it, you pay 18% GST on it. This reforms aims to simplify the taxation and improve the revenue collection for Government of India. Moving ahead, goods and service tax registration. Students, registration is one of the important aspect in goods and service tax, which is based on the slab rate of your sales. For example, if it is mandatory for a business with a turnover of 40 lakhs rupees for a goods, whereas if you are dealing in the services, for that the limit is 20 lakhs. Business can also opt for a voluntary registration. That means even if your turnover is not 40 lakhs or 20 lakhs, even if below it you have your turnover, you can register for the GST registration, which is known as registration by voluntary or also known as voluntary registration. Once registered, a business receive a unique GST IN, which is also known as Goods and Service Tax Identity Number, which is unique in all over the India. All processes are done online through the GST portal. Once you register on GST portal, you get GST IN. Let's move to the next concept, is known as input tax credit, which is famously known as ITC. One of the most important concept in GST is ITC, which is known as input tax credit. This allows business to claim credit to tax paid on purchase. Let's take the example. In earlier system of indirect tax regime, if I was paying VAT on any goods and if I am selling my services to my customer, where I was charging service tax, but the VAT credit I won't be able to use against my service tax credit. So in this, these difficulties have been removed by the goods and service tax. Now, if suppose I am taking the service of AC repair from the AC mechanic and he is charging GST on that bill of rupees 180, and if I am selling a goods to my customer where I am charging GST of rupees 200, then I can use that 180 against my 200 and only I have to pay 20 rupees to the government. So this is nothing but it is the beauty of ITC, which is known as input tax credit. Condition to claim ITC includes having valid tax invoice, receiving goods or services, also filing GST return on time. This helps to reduce overtax burden. Moving next, GST returns. Under GST, business must file regular return. It may be monthly or quarterly. If you have a regular supplier, then you have to file on monthly, and if you have taken the registration as a composite supply, then you have to file return on quarterly basis. Now, what are the types of returns we have? We have GSTR1, which is sum up all the outward supply. Now, what do you mean by outward supply? Outward supply means that supply where we have sold the goods to our customer. We have to give all the details in that returns. Where this outward supplied GSTR1, every supplier have to file on the 11th of the next month. For example, if we are dealing in full April month, so by 11th May, I have to file my GSTR1. After filing GSTR1, GSTR2 generated by the department and it's come in your account before 15th or 16th of that month. After getting the GSTR2B, we have to give the summary in 3B, which gets automatically calculated your exact net GST which you have to pay to the government. After these returns, every seller have to file a GSTR 9, which is also known as annual return, by annually. Timely filing is important to avoid the penalties, because if you miss the date, if after date you are going to file the GST returns, government may impose penalty on it. Let's move to the advantages of GST. GST offers a several benefits like simplified tax system, I may say that simplified indirect tax system, increased transparency, wider tax base, boost to the Indian economy and exports. It has made the tax system more organized and efficient. To conclude, GST is the revolutionary tax reforms in India. It is still evolving with continuous improvement and simplification. Understanding GST is essential for to whom a commerce student like you, business owners, entrepreneurs, etc. Thank you so much.